Hey, welcome to the latest episode of the Tanner Realty Group podcast. With me as always is Austin Cassity, and today we are talking about financing. This is Mike Tanner. I'm one of the co-founders of Tanner Realty Group. There's a lot of questions that go around financing, everything from cash deals, how many of them are there out there, should I be expecting a cash deal when I sell my place, all of that kind of stuff. So we're going to go through that today and hopefully help educate you a little bit about the world of financing in real estate transactions. So to start us off, Austin, let's talk about kind of the traditional financing that we see for a first-time home buyer.
Yeah, so there's, like Mike mentioned, there's a ton of different options when it comes to financing, but maybe one of the most typical financing we see in our market is a traditional financing, so going through a lender and either no home ownership or they've already sold their home. So there's no contingencies in the offer. So looking through the timeline of the buying process, when you start looking for your traditional financing, the first step, and this can kind of change depending on where you're at in the process, is going to be getting in contact with a lender. If you're in contact with an agent already, it's likely they're going to be able to tell you who maybe a good lender may be, give you a few options to interview and choose from. Then you're going to want to sit down with your agent. Once you get your pre-approval letter through the lender, that will kind of give your agent an idea of where you sit in the marketplace and what homes we can actually go look at. That pre-approval is so important. Most real estate agents, good ones anyways, are going to make sure that you have that pre-approval letter before they step into a house with you.
Absolutely they will, because if you don't have a pre-approval, particularly in this market when we are in a limited inventory, the seller will not give you the time of day. If they don't know you can pay for the property and they're under the impression you're just kind of a looky-loo at houses, they're going to be done with you before the transaction even starts. You've got no chance if that pre-approval doesn't happen.
Yeah, and once you get that pre-approval, great. We're going to start opening doors for you. We can start your housing search, looking for your dream home, your first home, an investment property, whatever it may be. And once we find that home, it's time to put in an offer. Because you're pre-approved, we will be able to write up a fairly straightforward offer. Some of these major components of the offer will be the earnest money. In our area, that's about 1%. And what the earnest money is it's kind of it's the collateral for the contract. And what it means is I'm going to follow this contract, otherwise I'm going to lose this money. And it's kind of an offering to the seller in a way that you're promising to follow the contract. And there are outs as well to get that money back, and we can go more in depth in one of our conferences we have with you.
So Austin, I'm confused. I thought the earnest money was so the agents could go to Hawaii.
Well, bad agents. That's not for us. No, the earnest money goes directly to the closing agent, at least in our area. And the closing agent and the escrow company holds on to that and disperses it based on contract. The agent hopefully will never touch it, and we're not going to touch it because that puts us at high liability.
All joking aside, that's actually one of our company policies at Tanner Realty Group. We don't touch the money. We don't like it to do that. We don't want any hint of impropriety whatsoever. It goes right to the title company, and they hold that in escrow for the period of the transaction.
And the escrow is a third party, so they follow directly what is requested by the buyer and seller through the contract. The next big component of the offer is going to be the inspection period, and that gives you the time to inspect the home, get a professional inspector out, and figure out what's going on with the home, and that is another negotiating point.
Part of the reason too that inspection is really important is because there may be some things that come up in that inspection that a lender looks at and says, nope, you know what, we cannot lend on this house. If that's the case, if a lender cannot lend on a house you're looking at, unless you're looking to do a flip and you need a rehab loan, you should run away, because those are not super stringent guidelines that they have. You ought to make sure that the lender is cool with loaning on the property, because that's going to really speak to the condition of that. Some folks are really hesitant to do an inspection. They don't want to put out the extra $600-700 or however much it is in your area. We would strongly encourage you to get that inspection so you at least know what's going on with that house, and there's no surprises for you, or we minimize the surprises for you, I should say. There's always surprises in home ownership, but at least this way they're minimized.
Yeah, and so once you are through the inspection period, you've negotiated and you make sure that it's going to be financed, you will finalize your lending with your lender, sign some closing disclosures, and then we're ready for closing. You'll go into the title company, sign your paperwork and all the paperwork for the lending company, and then we will close and time for move-in. That's everyone's favorite day. So that is what a traditionally financed without any contingency looks like.
Hey, Austin, before we move on, closing is when I sign? Is that when that happens?
So closing, it's a general term for the signing and the recording at the county. So the home is not technically in ownership until it is recorded at the county. However, signing, or closing in layman's term, is when you go into the title company, sign all the loan documents, everything that's needed to then send back to the bank, finalize, fund, and then close at the county when it's recorded.
I knew he knew the answer, but I just wanted to make the point. We've actually had buyers think that, okay, hey, once I sign on the dotted line, they're going to hand me the keys right there. And that's not how it works. It takes a little bit of time at the county for them to transfer that deed over to from the seller to the buyer. So I just wanted to make the point that closing is kind of that all-encompassing term, and Austin gave a great definition of that.
Yeah. So that is what it looks like to traditionally finance with no home ownership, or just through traditional financing. If you do own a home and you're looking to buy your next home, or you need to sell your home to buy that next home, Mike's going to explain kind of what differs from that original kind of timeline we put there.
You've got a couple of routes to go. If you currently own a house and you want to get into another one, you're going to sell your place and get into another one. You can rent your current place if your HOA allows for that, your city allows for that, all that good stuff, and then get into another house. Whatever your situation, your lender will help guide you on that if you're not paying cash for the house. So the first step, as in the traditional, regular, I don't own a house financing, is even if you own your own home, you want to sit down with the lender, because he or she will help you map out exactly what it is you're going to need to do in order to sell your house to be able to get into the next one. So let's just say, as is the case for most people, you have to sell before you can buy. You got a couple of routes you can go. Number one, you put the house up on the market, you get a short closing timeline, and you close that sucker in 30 days. Maybe you stay in an Airbnb for a month, take a little family vacation, whatever the case may be, and then you're in the new place. That's one route to go. The next route, you can make a contingent offer on the next place, and you are then bound by contract to get your house listed and on market in as little as 5 days. That doesn't mean it has to go under contract in 5 days, but you've got to have that house listed, ready to go to get sold in about 5 days. That is a very, very short timeline for most people anyway that are not planning on that. If they fall in love with another house and they think, oh man, now I got to get my house ready for market, that's a pretty tall order. So it's not the easiest way to go, but can be done. We actually have a couple of those going right now. And with that contingent offer, there are some other stipulations. For example, you can't take a contingent offer on the house you're selling without the permission of the house that you're buying's seller. So I liken it to a bunch of railroad cars all stacked up in a line, and if one of those gets derailed, the whole train can just go off the rails. So you have to be really careful and hire a super experienced agent who really knows what they're doing with contingent offers to make sure that that goes smoothly. So really, selling your house, making a contingent offer. Now, if you've got the money in the bank to pay cash, hey, you do whatever you want. It doesn't really matter at that point, because if the cash is showing up and you own a place, you can get into a place, set your own timelines, because technically you would own both houses at that point. So you can really do whatever you want. Austin, anything I missed there?
Yeah, I don't think so. Maybe just a clarification on what does contingent mean, and what does that mean? You kind of touched on it, that you have to sell your home, but what does a contingent offer look like to a seller if you're trying to buy that home and you send a contingent offer?
It can mean a variety of things. Number one, it can be seen as a weaker offer, because if somebody's coming in with cash, ready to plop down the money right then and there, and you have to go through the whole thing of selling your house and everything before you can buy, a seller is going to take the path of least resistance, and they're going to take that cash deal. However, if it is a good enough offer and you really give the seller exactly what they're looking for, maybe an over asking type deal because you really love the house, well, as long as your house is going to sell, it's priced to sell, the realtor knows what they're doing. I've seen these work in a lot of different situations. We have contingent sales going under contract pretty much every single week here in Clark County, where we are right now. It also happens in Portland, more than you might think, even in a low inventory market.
Yeah, and so another way to strengthen a contingent offer would to be already having your home on the market.
Oh yeah.
So
Definitely.
Already having that hurdle of getting the home on the market already out there, maybe it's already pending, will strengthen a contingent offer in the eyes of a seller as well.
The first thing I do when I get a contingent offer is I call the agent and I ask them where they're at in the transaction timeline. Because if they're past the inspection period and now it's a solid deal, the financing's solid, everything else, if they're past that inspection period, now it's simply a matter of just waiting on the lender to get the job done. And so that makes it a lot safer transaction for my clients in order to be able to move forward.
Correct. And then, so now let's walk through, let's say you have all the cash in the bank ready to buy your property. How does that differ from a financed transaction?
Everything's different. There's no appraisal. You can close in as little as 2 weeks. All it really is getting the money to the title company and having that transfer of deed. And so it can go really, really fast if you want it to. Some people, for whatever reason, they may have the cash in the bank. They still need a little bit of time. Everybody's circumstances are different. You can really set those timelines more when you've got a cash offer. One thing you do have to do within just a few days of getting an accepted offer as the buyer is you have to provide what's called evidence of funds or proof of funds. And that simply means you need to show a statement that you've got the money in an account to be able to pay for what you've said you can do. So we're going to trust, but we also verify as well. So we got to show that documentation in there to show that you've actually got the money. And then normally a couple phone calls with the realtors just to verify all that stuff, and then you're good to go.
Great. Well, that's kind of financing of a home purchase in a nutshell. There's so many more scenarios that can happen in the market. So if you have questions about your specific scenario, feel free to reach out to us, ask us your questions. We'd be more than happy to walk through your specific scenario with you.
Absolutely. We'd be happy to do that. Hey, thanks for listening to our latest episode here on the Tanner Realty Group podcast. There will be some more coming, so stay tuned. Have a great day.
Thanks.